Mike Meharry here. I'm the editor of SchiffGold News. I do most of the writing for the SchiffGold website, and I thought I would come on today and talk a little bit about investing in gold. Obviously, there's a lot of interest right now, given that the coronavirus has effectively shut down the entire U.S. economy. Actually, it's more accurate to say that the government has shut down the entire economy due to the coronavirus. Regardless, we've seen the stock market tank, we're seeing rampant unemployment, all of these negative effects, and that is causing people to flock to gold. Gold has traditionally been a safe haven, and we're starting to see that safe haven bid. Gold is now above $1,700 an ounce, and quite frankly, I expect it to go much higher given all of the stimulus and quantitative easing, basically printed money out of thin air that's being injected into the economy. So, talking about investing in gold, a lot of people have asked me, hey Mike, what is the best way to invest in gold? And my initial answer to that question is always, well, there really isn't necessarily a best way to invest in gold. It really depends on your situation. It depends on your goals. It depends on your portfolio, where you are, all of those things. So it's a very individualized decision. So I can't make that for you. I can't tell you this is or is not the best way to invest. My recommendation is always to talk to somebody who is an expert and can look at your individual situation, talk with you, and find out what is going to work best for your individual situation. So I always recommend talking to a SchiffGold precious metal specialist because that's what they do. I'm a journalist. I write stuff. But I can give you, one of the things people have been asking a lot is the difference between the various ways that you can invest. So you've got physical gold, you've got gold ETFs, and you've got gold stocks. Those are the three things that I want to summarize real quick. Just to kind of give you an idea what the difference in those things are, and that'll help you kind of get started in your thinking. Obviously, first there is physical gold. When I say that, I'm talking about gold bars, gold coins. At SchiffGold, we only sell minted products that are pure bullion. We don't get into the collector's coins. So we're talking about products that are valued based on the weight of the metal. There is an old saying that if you can't hold it in your hand, you don't actually own it. And that is the great benefit of physical gold. You hold it in your hand. There is no counterparty risk. You can trade it. You can sell it. You can hold it. It is yours. It is tangible. It is in your hands. Now, that brings up the issue of how am I going to store my gold? Do I want to keep it at my house? Obviously, that's the closest to you. And a lot of people choose to do that through various home vaulting or safe applications. Or you can vault your precious metals in certified vaults that are in other locations where you don't actually have the gold at your house. Obviously, that takes it out of your hand, but most of these vaulting facilities are insured, and you're guaranteed that that gold that you've bought actually exists. At SchiffGold, we always recommend, if you're looking to invest in gold, physical gold first. Peter Schiff always says 10 to 15% of your portfolio should be in physical metal. Again, that's going to vary depending on your goals and your situation, but that's kind of the rule of thumb that we use. But number one, physical gold first. You can hold it in your hand. It is tangibly yours. But there are also some other ways to take advantage of an increasing price in gold. One of those is gold ETFs. ETF stands for Exchange Traded Fund. In essence, it's almost like a stock. It is a fund that is built to track the price of a certain asset. And there's all kinds of ETFs. There are ETFs that are baskets of stocks. There are ETFs that track various commodities, and there are gold ETFs. These funds actually do hold physical metal. They do hold gold, but they don't necessarily hold all of the gold that represents the value of the fund. They are backed by gold. They're sold like stocks. There are some advantages to ETFs. For one thing, they're very liquid. You can buy and sell them very quickly through most of your financial exchange programs. Another advantage is that you can buy partial bits of gold. You don't have to buy a full ounce of gold, which for some people is cost prohibitive. So you can actually get into gold without having to buy full ounces. You don't have to worry about storing the coins, and again, it's very liquid and easy to trade. The downside is you don't actually own that gold. If you have a tenth of a share of a gold ETF, that doesn't mean you have a tenth of an ounce of gold. That gold may or may not even exist in the fund. They're not all necessarily well audited. So there are some risks to gold ETFs. A lot of people like to use ETFs who want to try to trade the ups and downs of gold, the short-term trading. If you want to try to anticipate gold is going to go up in the next few weeks and then you want to dump it. And a lot of people use ETFs for that purpose because, again, it's very liquid, and that's certainly an investment strategy that you can look at. Again, I would recommend holding physical gold first as your hedge, as your inflation protection, as your preserver of wealth, and then gold ETFs make a good way to play the gold market on a more short-term basis. The third way that you can kind of invest in gold in a roundabout way is through gold stocks. And these are actually shares of gold mining companies. So you're not actually investing in gold, but you're investing in companies that produce gold. And they tend to track relatively close with the price of gold over the long term. Right now, the gold stocks are lagging a bit behind the physical metal. Peter Schiff is very convinced that at some point the gold stocks are going to take off as well. It makes sense. When there's a huge demand for gold, mining companies are going to make more money. When the price of gold is higher, mining companies make more money. Gold stocks, though, are very volatile. They can go up and down. They are shares of companies, so it's important to look at the individual companies, look at how strong they are, look at their underlying financial dynamics, just like you would any other stock. There are funds that conglomerate gold stocks together. Those are an option that kind of mitigates some of the risks that you might have. So again, gold stock, you're not really investing in gold. You're investing in gold mining companies, and all of the risks that goes along with investing in any company goes along with gold stocks. You could have a bankruptcy or anything like that. So those are basically kind of the three options that broadly speaking are out there for gold. Physical gold, gold ETFs, or gold stocks. Again, it's highly individualized what is best for you. And again, I recommend talking to a SchiffGold special metal specialist. You can do that, precious metal specialist, if I can talk. You can do that by calling 1-888-GOLD-160, or you can just shoot them an email at info@schiffgold.com. And those guys, they know their stuff. They can help you figure out what is going to be the best investment decision for you, which of these products is going to work for you, how to balance those things out. And if you have questions about what's going on with the economy, and why should we even look at gold? Why is gold a good investment in a time of trouble? They can help you with that too. These guys are well versed in the economics and the macro situation of what's going on. So I'm going to wrap this up. Thank you so much for taking a little bit of time to watch. Keep up with everything that's going on over at SchiffGold.com/news. I'm writing at least 2 articles a day on what's going on. I'm usually posting Peter's podcast summary so you can kind of get what he's talking about. And Friday Gold Wrap podcast every Friday I host and talk about what's going on in the gold world and in the economy. So you can check that out. You can follow us on Facebook here. You can also follow us on Instagram or on the Twitter. So again, thank you guys so much. Hope you have a great day, and thanks again for watching.